Happy Tuesday. This is Caitlin from Realty One Group Apex, and today I want to talk to you guys about what is an assumable loan. So assumable loans are going to be popping up here because of the interest rates going up. And what it is that the new buyer can actually assume or take over your current loan on your house at the interest rate that you were originally quoted. So say that you did a mortgage last year or you refinanced last year and you have one of those 2%, 3% interest rates, or even up to 4%. That's still better than it is right now. This is a selling point for you because your buyer can assume that portion of your loan and then their payment is cheaper. Now, what do you do? How do you make money? So with the assumable loan, say you, just for easy numbers, you bought the house for $300,000 and now it's worth $400,000. That's what you want to sell it for. So the first $300,000 would come out from your assumable loan, and then you have two options to make up the $100,000 difference. You can either take out a second loan, usually it's an equity mortgage, so like almost like a HELOC, or you can pay it in cash. And what it does is it closes that gap. The seller still makes their profit, and then the buyer benefits because they're getting the lower interest rate. So it actually is great for both parties. So call your lender, and if you have an FHA loan or a VA loan, the buyer might be able to assume that, and it might make your property sell faster because of the fact that they can do that. So it's definitely worth looking into. And I do want to quick talk about with the VA loans, how that works. You do not actually have to be a VA loan eligible, meaning that you're a veteran or you had served or currently are serving, to get the VA loan assumption. Now, the only thing is if you are VA and you are selling your home, you want to be very, very careful to make sure with the lender that if you do this, you are still going to have your full allotment. I have heard recently that somebody did it and they were able to keep their allotment, it released it, but sometimes that is not the case. And so you want to be careful, because if you don't release your allotment, then when you go to buy another home, it's going to be smaller. And if you can't make up the difference, you're going to put yourself in a bad position. So you really want to communicate with your lender on this one, or your current mortgage holder, just depending on which side you're on, if you're a buyer or a seller. And if you have any questions, I'm more than happy to help. And you can give me a call at the number. We'll put it right here today. And I hope that you have a beautiful week. Bye-bye.